Good morning, everyone. Good morning. Happy Friday. Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. How's everybody doing? Good morning. Good morning. Let's see. What's going on? What has been going on? It's been a quiet week. Markets grinding back to all-time highs, it looks like. And I'll share my positions shortly. Let's talk a little bit about some economic data. Everything that has come out, pretty positive. Inflation numbers were good. CPI and PPI. Today, that we had some news about Michigan's Consumer Sentiment Index. I don't think that really matters that much. Although the consumer is, during that survey, most of the consumers that they surveyed, I don't know how they do it. They said they are concerned about inflation, and they're thinking inflation could be as high as 7%. This is what the consumer is saying. So consumer is spending the money, obviously. They're expecting it, but not only that, but they're feeling it, right? While the government numbers are looking the other way. Actually, inflation is subsiding. Inflation is getting under control, supposedly. Both numbers actually was as expected or lower than expected. So who's right, who's wrong? We're going to find out. Um, the A couple of topics I want to talk about is what's happening with the interest rates. So interest rates actually are ticking higher while inflation is going lower. Now, why is that happening? So I'm going to have my thought process about that. I have a TLT trade I trimmed. I had nice profits on it. I let it get back to even, which is not what you're supposed to do, but that was a longer term trade that I put on. When I show the trades, I'll share it with you guys. The key with the interest rates and what's going on with the markets is that, first of all, this week, outside the economic news, we had President Trump visiting the Middle East, the United Arab Emirates and Saudi Arabia. That was some show. Okay, I mean, I watched it live, some of it, some on replays. That they showed him the red carpet, and he took care of it, and he took advantage of it. Not only he was there as the president, literally every important company around the globe, American company, from Tesla, obviously Elon was there, and Nvidia was there, and Palantir was there, and Citibank was there. Not that they're important, but a lot of the high tech companies were there, and they shook hands with the emir of or the prince of Saudi Arabia and the emir of United Arab Emirates. He received a very warm welcome, and it seems like a couple of those Middle Eastern countries are opening the pockets. They have deep pockets, as we know. Their sovereign wealth funds hold a lot of assets, and major part of their asset group is obviously U.S. Treasuries as well as U.S. equities, and they are also in the Middle East working on NVIDIA, not NVIDIA, but on AI. They're building massive centers, AI centers, and it seems like they're converted their economies. The Middle Eastern countries are trying to, at least the ones there is no wars in, are converting their economies from an oil-based or natural resource-based economies. I mean, these people are in the middle of the desert. What they have built in Dubai, what they have built in, Jeddah is unbelievable, right? I mean, the tallest buildings on the planet. It's become they're switching their economies from oil-based to more of a service base, just like ours. Tourism is very strong, but more importantly, they're becoming a technological center of the Middle East, these two countries. And what better way than obviously do some AI data centers, and they ordered a whole bunch of NVIDIA chips. So it seems like it was a very, very positive, fruitful trip. And they also announced, both countries announced over $1.5 trillion worth of investment. $1.5 trillion. Again, this was a show of force. Now we'll see if it follows through or not. But Yeah, I mean, it was marvelous the way I saw it, and it seems like President Trump is moving U.S. closer to the Middle Eastern allies. And I mean, I don't see anything wrong with that. A lot of people, made a huge deal out of, Qatar, another Middle Eastern country, sending Trump Air Force One jet for $400 million, and Trump took it. And a lot of the other side said, "Oh, look, that he's getting bribed." I'm like, look, I mean, we're going to buy one. Supposedly both the Air Force Ones are getting old. I really don't pay too much attention to the news these days because most of it is fake anyway. Whatever it comes to, just put your head down and do what you're supposed to do. So going back to the interest rate picture, interest rates are going higher on the 10-year and 20-year. They're going higher while inflation expectations are coming down, except that the consumer is saying inflation is not dead. We think it's going to be as high as 7% this year, which is incredible, right? The gap between what the government is announcing and what the consumer is feeling or expecting is completely different. It's almost triple. Consumer is saying today, they said they think inflation is going to run about 7% in 2025. Government's numbers were 2.4%. So which is it? Is it somewhere in the middle? I'm not sure. But what the bond market is doing, see, nobody can control the bond market. President Trump keeps saying, lower the rates, lower the rates. President Trump, the Fed cannot lower the rates. Fed is stuck in a box. Fed at this moment cannot lower the rates. There's few reasons for that. One of them is they're obviously data dependent, they keep saying, right? Okay, what's that? The two things that the mandate that the Fed works with are two things. One, full employment. Two, low inflation at 2%. That's an inflation target at 2%. Let's forget about the 2%. Let's say we're going to get to 2.5. We're there. The economy is doing fine. As far as output is concerned, as far as GDP, although the last quarter was negative, but there's reasons for that because of the tariffs. Everybody was, ordering goods earlier, and there's also a lag in these tariffs. I mean, we're kind of the market and is completely discounting that we had a tariff war, we have a global nuclear economic war, and now it's all put away. It's all forgotten. Okay. Well, the tariffs are still there. Tariffs are actually historically are highest or higher than what they have been averaging. Even when us talking to China, lowering the tariffs, the reciprocal tariffs to 10%. Supposedly we're talking to China. Supposedly we're going to sign a deal. Supposedly a lot of other countries are coming to the table. So, but there is a lag effect to that, right? And is the consumer seeing that the pricing of things that they buy on a day-to-day basis, they're going to increase in a couple of months? Because so if you put something on a ship on China, it takes 30 days to get to the ports, LA or Texas or whatever it is, Galveston or New York. Well, from there, they have to get on a train. From there, they have to get on trucks and get distributed. Well, that's still on the water or just showing up at the shores now. So on those goods, there is tariff still. Who's going to eat it? Is the manufacturer going to eat it? Is the retailer going to eat it? Or is the consumer going to eat it? We're going to find out. Maybe that's what the consumer is seeing, but or expecting to pay higher prices because they have been hearing nothing other than tariff, all over the news or all over social media or, on the internet. So there is that lag. But what the bond market is looking at, this lag and saying, okay, we have 37 trillion in debt, national debt. If we do lower the rates and pump more money into the economy, okay, create more activity on an economy that's not weak. The only time Fed lowers the rates is when the economy is slowing down or going in a recession. The bond market automatically does that. Fed cannot control the bond market. The bond market is its own animal. Nobody can control the bond market. Bond market is trillions and trillions of dollars from treasury bonds, to corporate bonds, to high yield bonds, all kinds of bonds. Well, the bond market's not seeing that picture. So bond market's saying, I'm going to raise rates because the economy is doing well. I'm going to raise rates because the tariffs could be inflationary, more inflationary down the road. The bond market's seeing this picture 3-6 months ahead. Not at the stock market's almost back to an all-time high. We're about 3%, 4%, I think, from all-time high. The bond market's saying, nope, I'm not going to, we're not going to lower rates. Plus, we have close to $9 trillion of U.S. treasuries that are maturing this year. That has to get refinanced. On top of that, there's trillions and trillions of dollars from the COVID days with zero interest rate bonds, coupons on the corporate side. Those need to get refinanced. I mean, there's trillions and trillions. There's an avalanche of bond issuances coming. So when a lot of these bonds are going to be issued, the buyers, the new buyers of these bonds, may require higher interest rates, may require higher returns. And that is what's happening right now. The bond markets completely have decoupled from the stock market. Usually, when the bond market, what bond market reacts to is macro news. Macro is fine. Employment is almost full. Inflation is according to the government, is only 2.5%. Bond market is looking at it as, okay, well, there's no weakness. Why should the interest rates go lower? And the Fed, the box that the Fed is in, the economy is fine. We cannot just lower rates at this time, because just when we're getting inflation under control, if we lower rates, pump up more money into the economy, we may, rekindle the fire of inflation again. And then what, right? So I understand the administration would like lower interest rates, so mortgages come down. Mortgages are at all-time highs at 7% on the 30-year. Credit card interest rates come down. Auto loan interest rates come down. All this is dependent on the 10-year and the 10-year note and 20-year bond. They're not coming down. They're sticky. And so when the interest rates start coming down, then you all understand that the bond market is forecasting a slowdown or a recession. The recession odds had gone up quite a bit when the market sold off 20% because of the tariffs since Liberation Day. So that pullback was about 7 weeks. And this rally now that we're experiencing, like a V bottom, has been 5 weeks. And basically, we're back to where we were and higher than Liberation Day, which was April 2nd. So the bond market is not paying attention, and they're completely decoupled now. Rates are going higher, slowly but surely they're going higher, and the stock market's going higher. Well, at some point, what happens is that when rates keep going higher, stocks don't go up as much as they're supposed to. Basically, if you can get 4.5%, 5% on your money, risk-free, let's say, because supposedly U.S. Treasury bonds, backed by the full faith and power of the U.S. government, are risk-free, right? So meaning you're going to get your money back in 10 years, 5 years, whatever the duration is. So the short end of the curve is, today you can go put your money in a money market fund, get 4%. Why would you even go 10 years, 20 years, take that price risk? But the clue that I'm looking, or the tea leaves that I'm trying to read here, how much more can the stock market ignore the bond market, or they're completely decoupled, right? So I'm trying to figure that out myself. And what happens is that historically, though, there is a correlation between the interest rates, obviously, and the stock market. If you can get a 4 to 5% risk-free return, why would you risk your money and put it in the stock market, right? So a lot of people may say to that, well, yeah, but stocks return 25% every year. No, they don't. Last 2 years was an anomaly, 23 to 25%, 2 years in a row. What happened before then, right? So on average, though, stocks return 9 to 11%, including dividends, if you passive invest. Okay, well, take out inflation, right? On a nominal basis, you're either keeping pace with inflation or not. But the bonds, risk-free return. But look what happened to stocks, right? Within a 7-week period, stocks went down 20%. The stocks you're holding in your portfolio, unless you're holding indexes, stocks are volatile, right? Some stocks went down 40, 50, 60%, and they're right back to where they were almost, but some stocks went down, 40, 50% in a short period of time. So there has to be some correlation still between bonds and stocks. And bonds are telling a completely different story. And the Fed is going, we can't cut rates now. If we cut rates, what if inflation comes back? Then what do we do? Right? But long story short, the stock market was pricing in calamity because stock market's always ahead. That's why we went down 20% on the SPX and about 25% on NASDAQ. Now we're back. Okay, so that pricing is done. Basically, we're saying now, okay, no slowdown, definitely no recession in 2025. Stocks are forecasting that. Bonds are forecasting the same thing. By rates going higher, bonds are saying no recession, no slowdown, no need for the interest rates to go down. And that's what's happening at the moment. So there's a push and pull happening. I don't think Fed is going to cut the rates in June. They didn't cut it in May. There is only forecast, I think, 2 interest rate cuts this year. I don't think that's going to happen. If the economy stays strong, I don't think the Fed is going to cut rates. And as much as the Trump administration would like lower rates, I don't think we're going to get it. Yeah, that's where we are. I think, the important thing is this refinancing that we're going to go through over the next 6-8 months. Somebody has to buy these U.S. Treasuries. By the way, we cannot just say these are IOUs that are coming due. So figure you have a car loan that's coming due, right? Well, what are you going to do? You're going to own the car. You're going to own the pink slip. Unfortunately, the bonds don't work out that way. The way the bonds work is we have to replace them with new bonds. While the old bonds we had issued during the zero interest rate policy period, the rates are much lower than what we're going to pay now. Okay, so we can't just say, well, let's just not do that. Let's not refinance. Well, we have to refinance because we created these IOUs. As a treasury, we take in $5 trillion in revenue. And as Washington, they spend $7 trillion. So that $2 trillion every year keeps getting tacked on the federal deficit, national debt. And we're at 37. In another 70 days, I think we're going to be at 38, regardless of what the administration is doing and where we are. So when these bonds get refinanced, we're going to find out what kind of interest rates we'll have to pay for them. We'll have to make it worthwhile for the new buyers of these bonds, or even the existing buyers of these bonds, new issued bonds. We have to offer them a higher coupon rate or interest rate in order for them to make it worthwhile or make it palatable for them to invest again in the same bonds, because they're in it for 5, 10, 20, 30 years. These are long duration bonds. And we'll see. The bond market's seeing that there's an avalanche of new issuing coming up, and the buyers of these bonds are going to require higher rates. So that's why the bond market's doing what it's doing. What else? That's about it. I'm gonna put the link up if anybody wants to come on. My internet is really sketchy. I hope I don't get cut off. Let's see. Yeah, I think I froze. Did I? I don't know. I hope not. Okay. Here's the link. Up, up, and away. Paste. Okay, here's the link if anybody wants to come on. All right, so if there's any questions, please put it up. Let's see. Mojo, good morning. Thinking about selling. What is he saying? Thinking about selling WRD 10 puts. Why not do the 7.5s? Why not do the 7.5s? They're like 90 cents, I think. Earnings are coming out on WRD, so I'll have a position that I'll talk to you guys about that. Good morning, Vic. Good morning, Techie. Yeah, Vic, you've been missing from the Telegram chat group. Okay, I'll talk about the Telegram chat group. If anybody wants to join or support the channel, we have a members group. I put my trades on live. Again, none of this investing or trading advice. If you do join, click on join, obviously, on the channel. Send me an email, sergio@sergioavadian.com, and I will send you the link of the Telegram chat group. But the other thing that the members get is I do a members-only live stream every Wednesday at between 3 and 5 p.m. Pacific. Those are really very good, very informational. And but on the channel, I do 2 live streams, one on Mondays called Trading with Sergio, and one on Fridays called Power Hour, obviously, 10 a.m. Pacific, 1 p.m. Eastern. So I got company. All right. Let's add Doug to this. Hello. There's one of my members.
Hey, Sergio. Hey, everybody.
Hello.
Been a
How's it
fun
going,
week.
sir? How you doing?
Oh, I froze.
Did you freeze? Okay.
Oh, I hope I don't freeze. My computer's sketchy also.
Yeah, you froze and you came back. What's going
doing
on?
good. It's been a fun week.
Yeah, it was a good week for you, I can tell. And Doug is active. So Doug is one of our members on the channel. He has no fear. He is willing to learn and he's willing to try. He has no fear. He has no paper hands.
Sorry, this is my best computer.
You're back again. I was saying that you have no fear of pulling the trigger. So there's a model citizen right there about not being fearful of pulling the trigger. And he learns and he tries, and I take my hat off to you, man. I mean, I'm telling you, it's wonderful to see, and hopefully you had a few more tools in your toolbox than you showed up a month ago. Yeah, you keep freezing. I don't know. I may have to boot you, Doug. I may have to boot you. You're froze again.
Yeah.
Yeah.
I could switch internet connections. Maybe that'll help.
Okay.
Then I'd better go.
Go out and come back in. And
Okay.
then let me do my positions and some charts, and then we can discuss it later.
Nuts.
Okay. All right. So what's going on? Market keeps going higher. I'm trying something with 0 DTEs today. I think I'm going to lose my money on that. What happened? Okay. Okay. Let's see where we are. All right. So the positions first. What do we have? We have 4,000 shares of EVGO, average cost 372.5, 373. We're at 393. I like the chart. I'll show the chart in a minute. So today, I got rid of my 200 GGLL calls. Thank God. It opened really strong. I actually ended up making money on those, which is almost a miracle. So those are gone. I have 30 long puts on Pony AI. It's a Chinese AV, autonomous vehicle company. And so I bought the puts. Cost is about 278 or 3, something like that. And then I sold the expiring today puts against it, and then I'll sell more puts against it again. So I'm calling those. So this is the one doing with the 0 DTEs. Oh my God, I'm getting smashed. Don't like it. I did a 0 DTE trade. I bought a put debit spread for today's expiration. Yeah, I'm down like $1,800 on that. I don't like it. I definitely don't like that one. I need to figure this game out though. The whole world is trading 0 DTEs, and I need to understand and learn getting the game. So next one is TLT. I had 25 lots. I was going out to March 2026. I was short 85 puts, long the 95 calls, and short the 110 calls. I had a really nice profit on that. So on the way down, I trimmed. I'm down to 15 lots of each. Interest rates don't look like they're going to go down. My thesis was we're going to slow down. Long bond is going to go, or 10-year and 20 years is going to go down to 3.5%, and TLT would get to 110. Well, that did not happen. We're at 86.30, and every rally is being sold. I mean, I'm down a little bit on the trade, but I took some profits on the way down. So whatever is existing, I'm down a little bit, but it's not turning out to what I thought it would turn out to, but you can't be right on every trade. And what else? Oh, we ride, as Mojotronics asked. So I'm long 3,500 shares of 750. It's 880, 878. I'm short 5 lots. I want to add to it. I'm short June 7.5 puts at $1.10, I think, or $1.07. They're down to 85 cents. But against the shares, I'm short calls. So I'm short June 10 and June 12.5 calls. Earnings are coming out next week, WRD. Why did I pick this one over Pony? Pony and WRD are the same thing. They're both Chinese companies doing autonomous vehicles. That's the future. When we look at the charts, you guys will understand why I'm short one and long the other one. So please bear with me so we can do that. And let's see what the S&P 500 is doing. Yeah, I see it. It's rallying. Oh my God, yeah. It's flag after flag after flag after flag. And yeah, that's what happens when you're on the wrong side. So I bought the 0 DTs. I bought the 59.20, 59.10 0 DTEs, and they are going to hit the wall unless today is option expiration. Anything is possible. I have 2.5 hours of life left in those. So we'll see. We'll see how that goes. This is the 2-minute chart. Let me go to the 1-year chart. This is the 1-year chart of SPY. Let's go to SPX. Then go through some charts, some Mag 7 stuff. This is the, hope you guys are seeing this. I'm hoping so. Well, this is where we are, up and away, right? We're literally up here. We are all-time high 61.47. We're at 59.41. So we're like 3% from all-time highs. And will there be a pullback? I don't know. There may be. But we've left gaps everywhere. Will they close? I'm not a huge fan of gap closing. You know, a lot of technicians say, yeah, gaps must close or whatever. I don't know. At the moment, the market is strong. Don't argue with the market. So why did I go buy put debit spreads on 0 DTs? I did it here. Actually, I bought them here was hoping it was a double top, but then I need to learn how to take the loss and get out on these because they're going to expire worthless. There's no reason for them to expire worthless. I should have taken the loss right here when we made a new high. Did not. So I'm learning. I don't deal with 0 DTs too much, but I want to learn and I want to get more involved, especially selling put credit spreads and call credit spreads instead of being directional in these. But today I took a directional bet. Only 10 lots, so it doesn't make me or break me. Actually, it could make me because max gain on that is $10. I only put up a couple dollars. So, but now I am super out of the money. They're 59.46. We are. Those 59.20. What are the odds? SPX drops to 59.20. I don't think it will, but you never know. I'm not gambling. I have a thesis on it. I follow quant data and I watch theirs. NBC is like 59.20 today. That's why I did it. And we're running away from NBC. So that's not good. NBC meaning most valuable contract. Mag 7 actually is lagging today for some reason. This is Apple. Oh, let's go with QQQ. This is QQQ. Not the 2-minute. I want the daily. Daily, 1 year, 1 day. Yeah, this is what the QQQ is doing. I mean, that QQQ is actually closer to an all-time high than the SPX is. And yeah, just ripper rally, man. like nothing happened, right? This is TLT, and you guys understand. So the TLT is an inverse indicator. If TLT is going up, that means interest rates are going down. If TLT is going down, that means interest rates are going up. Well, TLT has been going. TLT was doing fine here. I put the trade on right about here about a month and a half ago, and we got up to 95, and within literally, interest rates don't move like this, by the way. 95 to 85, that's massive. So interest rates shot up, bounced, retested. Now we're trying to hold. We'll see where it goes. I still have 15 lots left. We'll see how it's going to work out. So I'm short the 85 puts, as you guys can see with the label here, long the 95 calls and short the 110 calls. That's I've done it. I did it with a 270, 275 credit. Would I mind owning TLT at 82 and a quarter in March 2026? Probably yes. So, but I want to add until things move my way. But lesson of the day is I literally had like a 5K profit on that when TLT was up here, and I didn't take it. And now we're even to a little bit of a loss. Not a good way to do things. NVIDIA, yeah, I mean, look at it. It's stuck on the upper Bollinger Band and just keeps going higher. What else is there to say? Amazon, same thing. Although they're not going crazy today, I mean, no, don't question it. Microsoft, I think, was the weakest. It became the strongest. That's Microsoft, almost at an all-time high. Google is the lagger, but now it's just going above the 200 EMA. So I got out of my July 2x ETFs, but I may actually get back into those at some point. That's Google. Okay, let's look at the positions I have. This is EVgo. If you have questions, please put it in the chat. So I like these types of patterns. There was a catalyst here, earnings, big up day. We're just going sideways now, digesting the gains. It's kind of a consolidation pattern, waiting for the moving averages to catch up, which is good. So I have 4,000 shares. I don't mind adding to it. I have a gap close, potentially about $6, so I will hold this. I have shares. I don't have options. I like these types of patterns. There's a little bit of, base and then breakout. Earnings were the catalyst. Earnings were much, much better than expected. EVgo's EV charging station company. For lack of a better word. Let's look at, we looked at TLT. This is Pony AI that I have puts on. 4 to almost 22 in like 1, 2, 3 weeks. So when things go parabolic like this, I tend to buy puts. There's reasons for all of this. Obviously, one is short covering, but more importantly, they have a deal with Uber, but so does WeRide. So this is called a pair trade. I like pair trades. Pair meaning both companies are in the same business. Both actually, NVIDIA has a stake in WeRide as well as Uber. They just announced a $100 million deal. So why is one quadrupled and the other one is still dying? Well, not dying, but why is that, right? So, well, that's called a pair trade. So you short one, you go long the other one, hoping the gap will close in between. So is WeRide going to do what Pony did, or is Pony going to pull back while WeRide is going sideways? So we're going to have to find out. That's WeRide. This is Pony. Look at the difference in chart. The companies are almost identical. So Pony has become a $7.5 billion company, and WeRide is a $3 billion company. Why should it be that way, right? So we'll see. We'll see how that trade goes. Oh, I did a little swing trade in Xena, made a few bucks overnight, got out. I like these types of charts. It goes sideways, 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 and they break out. TLT we looked at, SPX we looked at. I think my options are going to expire worthless on those, unfortunately. Yeah, but I'll keep taking shots. Yeah, definitely. They don't look good. Here they are. This is the 2 minute. Yeah, it just keeps grinding higher. We had a little sell-off in the morning, and that was it. Look at this. This is just exactly like what markets were doing in 2023, 24. A little bit of a sell-off. Every sell-off, every dip is bought, and then up to the races. Yeah, I don't know, man. You know, I mean, I just did a day trade, so that's that. But yeah, look at that. That's a 10 minute. That's the 30. You know, nothing wrong. Just higher highs, higher lows. Why are you questioning it, Serge? As far as other things, other stocks, Tesla. That's a 2 minute. We don't want the 2 minute. We want to look at the daily. I think it was last Friday. I said, or maybe Monday. Last Monday, I said Tesla's about to have a $50, $60 move. Sure enough, we actually did trade TSLL, myself and the group. Not on a large size, but we did. And yeah, when Tesla moves, it moves. And I distinctly remember saying, you know, after this earnings came out, Tesla moved up, broke the downtrend, consolidated for a week, and then off to the races. I said Tesla's going to move $60 one way or the other. Sure enough, when we broke 300, we're gone. MicroStrategy, Bitcoin is doing well. Bitcoin actually also is decoupled itself. This is IBIT, which is the BlackRock ETF of Bitcoin. Here's a MicroStrategy doing well. Here's 2x ETF of MicroStrategy, MSTU. And be careful with these, you know, 2x ETF like TSLL, SOXL. They don't move as much as you guys think it should move. There's a reason for that. It's called slippage. So I have explained that before. I don't want to go through it again. Big loser in the S&P 500, United Healthcare, although it's bouncing another 12 today. Yesterday, I mean, look at this thing. 606, yesterday's low, 250. Talk about a falling knife. Now, I think Doug did a put credit spread, and he made a bunch of money yesterday on that. I didn't. Good for Doug. All these gaps, it's incredible. This is an S&P. This is not a mom and pop company. This is a multi-$100 billion company, and I mean, 250 was what it was 4 years ago, actually. So, you know, do you deal with falling knives? It's really difficult. They're getting investigated by the DOJ that they may have defrauded the Medicare and Medi-Cal systems. And I'm going like, if that happens, the knife is going to cut deep. So I try to stay away from these things, although I try to structure a trade, but I don't know. I don't want to play. I want to keep my powder dry. Oh, Pony, why am I doing that? Some other ones, some of the quantum computing stocks are moving. This is Qubit. Yep, they go sideways, 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 and they break out. And Rigetti, same thing. I like these types of patterns. I mean, it doesn't matter. I'm just looking at the pattern. And so in my long-term investment account, I'm long 6 stocks. One is Google. I was lucky enough to buy these almost at their lows. So completely lucky. I wanted to buy Google about 140, 145. I bought it. I bought Unity Software. I bought Nike at 53, 54 range, you know, after waiting years and years. So they're all very profitable at the moment. I only put about 35% to work, so I still have more to go. I also bought Kava about 80 range, 78 to 82 range. I was in Kava, I got in and out, so you know, I bought some stocks, and I like Robinhood quite a bit. I think it's a little stretched, you know, retesting the old highs. I think on a pullback, definitely. So what happened is that all these stocks were downtrends, now they're all uptrends, so we're back to buy the dip as opposed to anything else. Another crazy one is Hims and Hers. I mean, look what's happening there. 25 to 65 in like two weeks, and then it went from 73 to 25 in about a month and a half. Crazy. OKLO having a huge move. I like these types of patterns, and one of these stocks that I'm definitely looking to buy is Oscar Health. Just consolidating, going sideways, definitely on my watch list. A little bit more sideways, moving averages catch up. You got to buy this. It's about 17. Earnings were great. That's where the gap is about. What else? That's about it, folks. If you have any questions, please put it up. And back to SPX. Yeah, it's strong. I mean, there's no question about it. I should have bought call debit spreads as opposed to put debit spreads on the zero DTs. Shoulda, woulda, coulda. If my uncle had, you know what, it'll be my aunt or something. Yeah, that's where we are. And did you guys see any of this? No charts. What do you mean no charts? I put it up there. What are you guys talking about? Did I do all this for nothing? Oh my God. Are you guys serious with me? No way. Are you guys serious? Did I all this for nothing? Oh, the charts are not even showing up. What happened? Screw it. This goofy StreamYard, bro. Only blue screen. Yep, of course. Yeah, because I shared it and it's not there. Mother humper. I hate StreamYard some days, or my computer, or whatever. Yeah, they're not even there. I apologize, man. Sorry. Sorry. Do you trade zero? I don't trade. Fuck. Oh, Doug is here. Let's add Doug. Let's finish strong. What's up? Yeah, I did this for nothing. This is unbelievable.
It's like a radio show, old-time radio show.
Yeah, radio show. Yeah, watch me on. It's ridiculous. I mean, I shared it. Share screen. Let's do it again. Window. It's not even showing. I don't know why. Okay, fuck it. Whatever. All right, let's answer some questions and let's go. Take it be good afternoon. Yep. Hi, exam. Hi, Rendo. Cool. Hope all is well. Yeah, I'm sorry, guys. Sorry. I didn't even know. I just went right through it. Vic G says, do you trade zero DT with charts or you just, no, I don't trade, well, charts to a point. I mean, what's the point? 2-minute charts I watch, but I get, I'm subscribed to Quant Data. I get my gamma or GEX, gamma exposure, delta exposure, and most valuable contract. They posted live, so I get it there. It's a subscription-based thing. I don't guess. No, I'm trying not to guess, but then today it's not working out. Big G, no charts, only blue screen. Sorry. Okay, sorry. All I can say is sorry because it's not showing up. StreamYard is not picking up my Think or Swim page. Although I can see it, StreamYard is not picking it up. What can I do? Apologies. All right, Doug, what's going on?
Well, I had a couple of questions. So I went to the Quant Data show this morning, and I didn't see where they were talking about MVC. Maybe I was on the wrong channel or something.
No. Did you go to their server? Did you go to the Discord?
Yeah.
Okay. With apple bottom jeans?
I'm sorry, what's that?
The host is Apple Bottom Jeans. His name is William.
Oh.
Did you?
So I have to look for that channel?
Well, yeah, you have to join their Discord, not just Discord. No, the channel is Quant Data. The Discord channel is Quant Data.
Yeah, and then there's a bunch of channels.
Right, yeah, there's a bunch of comments flying around, right? You saw that?
Yeah, there's a bunch of different channels I could expand within the Quant
Data.
Data.
There is one that on top you go, it says live. It says trading stage. You just click on that, and then that's when you'll hear the host. He doesn't put, he just himself. And he will tell all, or if you go through the comments that are going up and down, MVC is mentioned quite a bit, actually.
Yeah, there was a fella on there. He was saying that his nephew was trying to get candy out of his pocket or something, and there was a bunch of charts on the screen. Is that the guy? Asian fella?
His name is ABJ, Apple Bottom Jeans. That's the host. But the bunch of charts on the trading stage
Yeah.
is, yeah, you were at the right place. Yeah.
Oh, okay.
So listen in. Just listen in. You can put something in the chat. It's free. It's open.
Okay, I'll try again.
Yeah. Yeah. So
The other question was, I've been watching a lot of Tasty Trade, and Tom Sosnoff, he was talking about, he made a comment, so maybe you can't answer it because it's not your comment, but he said something about covered calls are capital inefficient. I was wondering if you knew what he meant by that.
Capital inefficient?
Yes.
Yeah. Well, I'm not a huge fan of covered calls unless there's two ways I use covered calls. So the reason it's capital inefficient is because they make you, first of all, feel like a prisoner, right? You own the underlying.
Yeah.
You're buying a stock for it to go up, right? I mean, simple as that. And they also cap your upside.
Yep.
So you're tying up the capital. The inefficiency comes because you're tying up not only you're tied up the capital, but you're limiting your return now.
Yeah.
That's not an efficient way of doing things. Now, I use cover calls two reasons. One, when the juice or the premiums on the cover calls are so high that I look at it as an overall trade through expiration. So when I did the we-ride trade, right? I'm looking at that until June 20th. My return, if I do get called away, is going to be about 55% for a month. That's very capital efficient. But if it was some stock that I'm going to take few pennies in, right? What's the point of that? Now, the other way I use cover calls is for repairing positions, because sometimes you're going to buy something, it's going to go down on you, right? That's when you just kind of keep selling calls and try to repair it, try to lower your costs. But then imagine if you owned United Healthcare, you sold cover calls. Where does it get you? Where is it going to get you? Let's say you bought United Healthcare at $400 after it dropped $200, right? And you sold $400 calls. Where are we? It doesn't make any difference, right? I don't like it unless I get like really, really worth my money out of it. The only reason I do it is because I'm able to compartmentalize a certain stock with certain options. And I look at my return. If I were to get called away, what it'll be. I would never write cover calls unless over a month period, my return is going to be at least 25 to 30%. If it's not, that includes capital appreciation, by the way. If it's not, and on the other side, is it going to lower my cost basis at least another 20%? While on WRD case, it's doing both. If I get called away, it's 55%. If I don't get called away, my cost is 7.5. It's going to lower my cost basis at least $1.50 range, which is 20% range. So, and that in those instances, I will do cover calls. But otherwise, be a man. Hold the damn stock, man. It is definitely capital inefficient, especially in bull markets, by the way. So, yeah.
Yeah, right.
Yeah. Like you have issues like that, right? You have the hymns
and
whatever, right? Yeah.
Oh yeah, I'm stuck. My big mistake on that is I had leaps and I got out of them after made a little profit.
Yeah.
And I should have held those.
Yeah. Give me 1 second. Can I put whose site? Quant Data. Just go to Vic. Just go to go Google Quant Data Discord channel, and then you'll get it. Yeah. So that's one question. What else you got for me?
Oh, that's about it for me.
That's it. Yeah. So Tasty seems like the channel that you were on, or you're still on probably. I don't know how he's doing. I haven't been following him, to be honest with you, because he fell in love once he joined Tasty. He fell in love with these strangles.
Huh.
And when the market's ripping like this, those strangles are going to absolutely just kill you. You know, but you did that a few times, right? Those,
Oh yeah, yeah,
yeah, selling calls, selling puts. Is when the velocity of the moves are this quick, right? You're gonna get stuck, and you're gonna most likely get whipsawed actually, because then you're gonna move the put up and move the call up, and then it'll top, and then it'll tank, and then now your puts are gonna be in trouble. So you're gonna getting hit with a right cross and a left jab constantly. I'm going like, you need to manage those. You cannot like, and then what you do is
right.
you go further out to take more premium. You go further out. Now you 1 month trade now has become a 6 month trade now. Now you got to be
Yeah,
glued watching it, and they keep going against you. And then what? You're gonna go out another 3 months. And I'm going like, and at some point they are going to expire worthless. But we just created so much unnecessary headache for ourselves that we started with a 1 month objective or 40-day objective, and now we're at like a 6 month. Like, how did that
yeah.
happen?
I don't like them either.
Yeah. Yeah. I mean, selling calls is really, really tough. Look what's happening, you know? Selling naked calls. Selling calls is fine. I mean, but selling naked calls is tough. Very tough. There's no limit to the upside. There's no limit to your risk. I mean, seriously. So I heard you did the ACHR. Why did you take the money so fast?
Well, it was, it's only one day, and a good move in one day is like,
Yeah. No,
it's
I'm fine. Yeah. But I thought you did
you don't
those
want to
longer
turn green
term.
into red.
Oh, yep. That's that's one of the Bible. That's one of the rules
Yeah,
of the Bible. Yeah, the red is good. The red is, I mean, red is not good. Green is good, but then turning green into red is very bad. Just horrible. Although, if you have green, why don't you let the green get greener? Is the idea,
yeah,
right?
yeah. Which way do you go? So
Yeah.
I already had leaps on Archer, and
Okay.
uh, and I bought some shares finally that I didn't have any shares.
Okay.
But
Okay.
my main objective was to try and figure out the you do something with a kicker, the
Yeah.
synthetic. That
Yeah. Yeah.
was and I'm very happy. I learned a lot. I think doing that.
Yeah. Well, I think um you know, I am all for selling puts, right? But why not just use that credit, especially if stocks are doing what they're doing?
Mm-hmm.
Why not use that credit to a certain degree, not all of it, to add a booster? It's like a booster rocket or something, whatever you want to call it, to a stock that you like that's trending higher. I think
And I need to find it. I would like to find a good way to do that. How far? So what does a booster mean? If I buy calls, I have to be a conviction that it's going to go higher, right?
obviously,
And
yeah.
I don't know how far out to go. I don't know in expiration and time. That's
Well, and
all. I've never done that.
the way I look at that is you obviously you have to have an educated guess, right? So,
Hmm.
for example, on Tesla, right? We know Tesla moves fast. When it gets moving, it moves both directions, up or down, right? And when that thing was consolidating for a week, and then you knew it was, if it does break out, I said it actually many times, and I said it's going to move $60 one way or the other. It's going to break down or break higher. Well, so the TSLL trade, I don't know if you did that or not, right? sell the puts and buy the calls.
Yeah, I
knowing
think so.
Tesla that it's going to move like 50-60 bucks in maximum a month, because that's what it does. Then you just go out a month. But you have to look at the history of the stock. Every stock is different, right? And if you look at Hood maybe, or if you look at HIMS, right? I mean, that thing moves. Or Oklo, right? All these things, you don't have to go out too far, right? Because they're $30, $40 stocks. They can move 10% every day. So, and once they break out, I usually go about a month out, the next expiration, whatever that may be. So if I have like a week left in May, I wouldn't do May, but I would go to June. Okay. But on slower or less expensive stocks that are not going to, even if they move 10%, the options are not going to move that much, is such as Archer, let's say, or things like that, right? Then you want to go out a couple of months, give the stock fully time. And more importantly, you have to also pay attention to, okay, how big is this company? Can it move fast enough? Like, are there so many shares outstanding that it's going to be pennies of movement versus, Tesla moves or HIMS or Hood or whatever, right? Although they all move fast these days, honestly. The speed of the movement and the magnitude of the movement is a lot. So, but usually my rule of thumb is I go out about a month. If I have like 3 to 4 weeks, I'll keep the current month. But let's say if I were to put on a synthetic today on something, today's expiration, I'll be okay with June. I'll give myself 4 weeks. So if we go, let's say by the end of May, well, you're taking 2 weeks out of the June expiration already, then I'll go to July. So my rule of thumb is that. Another rule of thumb is the kicker is up to your conviction level. So the boost, I mean. So you sold the puts, you're going to sell the puts anyway. You can do half the amount of the puts that you sold. You can do triple the amount of the puts you sold, depending on your conviction level. And that's how you regulate your boost. Like, what are we doing? Like on the turbocharger, do we turn the boost all the way to 10 psi, or do we go at 5 psi, right? So that's that's the analogy I can give you.
That's helpful. Thank you.
Yeah, but synthetics work. I mean, synthetics on a bear market, synthetics work too. Like if it, like, imagine on United Healthcare or something that's like downtrending, right? Then you just can sell the calls, buy the puts. Same thing. That's a synthetic short and a synthetic long. It is tough to do that, obviously, but if I mean, on markets that are doing what they're doing, like this bull markets, you want to squeeze every drop of the juice out of the market. And if you're just selling puts is fine. They're going to expire worthless. You're going to roll them up and you're going to get your 3%, and okay, it's good, it's fine. But why not try to be a little bit more aggressive? You're still doing it, by the way. Overall, make sure when you do these synthetics, the first thing I look at when I'm doing synthetic is, for example, TSLL, right? It was like, I think it was 10 and a half, 11, something like that when we did it. So I want to make sure that I'm comfortable buying this underlying with a credit left over. So when we sold the 10 puts and bought the 15 calls, I think we did it with like a 25-cent credit or something like that to the put side, right? So stock is already 11 and a half range. Will I be content buying Tesla at 970, TSLL at 975, right? That's the first thing I look at. Once the answer is yes to that, then you'll decide how much of the credit you want to spend on the call side. And I was content buying it at 975 if I were to get assigned, and it worked out. But those are the things I look at. How to pick strikes. How to pick strikes is all going to depend on how much of the credit I want to keep. and how much in case of assignment, how much I want to lower my cost basis once I get assigned, how much is my credit, so that am I okay buying that underlying at that price? I forget about the calls altogether, like doesn't even make any difference. That's my candy. That's sugar, that's icing on the cake. First thing, if I get assigned, because there's no guarantees, it could go down. Do I want to own TSLL at that price or any underlying? Once the answer is yes, then you decide if you really want to go aggressive on the call side, how much of the credit you want to spend. But ultimately, always leave yourself some credit for assignment. So even if the calls expire worthless and it doesn't work out, let's say, okay, calls expire worthless, but you still worked for some money on that trade, you're still going to have some credit, because it could be in between two strikes. Both sides could expire worthless, but it was worth your time to play. They paid you to play for a week, for two, for three.
Right.
You know what I mean? So those are the two things. Yeah. Okie dokie.
I heard your comment about 7% interest or inflation expected by the consumer.
Today, yeah. Today,
bullish,
Michigan Consumer Sentiment Index came out, and I don't know who. I don't pay too much attention to that, but who did they survey? Because the survey participants' expectation was 2025 inflation is 7%. And I'm like, well, the government's saying it's 2.4, 2.5. So I don't know who's right, who's wrong. I don't know.
Yeah, it's a widely cited. The Michigan survey is widely cited number.
Yeah.
Study.
It came around. I think it was like 8:30 this morning. And look, the consumer is feeling the pinch of inflation. Inflation is not going anywhere, and bonds are definitely sniffing that. That's why the bond market is not going, ignoring what's going on at the moment. Bonds go, nope, rates don't need to go down. That's where we are. Okay. Oh, Lynn, what's up, Lynn? Lynn was complaining that Robinhood fills are not good. I can say that. I texted back. I texted her back and said, Robinhood is not free. People go, Robinhood is free. I go, no, they make money on the float. They make actually so much money on that. Who's Amit? I don't know who Amit is. Do you know who Amit is, Doug?
Yeah. Amit's a YouTube personality. He has shows all day long. That guy. He's like CNBC.
Oh, okay. Cool. I have to check it out. Oh, Amit said they only surveyed 300 people. Yeah, I don't know. And they found all 300 of them said 7%. I go like, I don't know.
Yeah, Amit's done a lot of Palantir coverage. He really likes that. He's been on TV with them and all kind of stuff.
Okay. I have to check it. Is this channel Amit?
Well, I don't know. He's big into the fintech stuff, with the SoFi and those guys too.
Okay. So he's a quasi analyst or something like that, I guess.
I guess he's kind of a young guy. He goes with the young crowd,
Oh, okay. Okay. So are they the YOLO crowd, or what are they?
I don't watch much because he's got so much content. I just can't. How much can you watch?
Yeah, it's too much. It's too much. I mean, I'm thinking I'm putting out too much content. It's like, look, markets are the markets. Market's going to do what they're going to do. You just do your trade and then you sleep on it. And if it works, it works. I don't know.
Yeah, if you spend all day watching YouTube, how are you going to do any research?
Yeah.
On your own.
Yeah. No. You actually, the more you watch YouTube, the more confused you get.
Yeah.
You just need to have your conviction and okay, this is this trade I structured for this. This is what I'm going to do, and do the trade, and then that's it. We're done.
Yeah, you can listen to 5 different shows and get 5 different opinions, completely diverging opinions.
Yeah, definitely. Definitely. That's why I don't watch CNBC. I don't watch much. That's why I didn't know who Amit was. I don't watch much. I mean, I don't want to get pushed and pulled with every bit of news, and because somebody's interpretation of the news could be completely different than what I'm thinking, and then you start questioning yourself. You have paralysis through analysis. I mean, look, bro, this is what it is. It's just a trade. Let's just move on. It's not going to make me or break me. Hopefully, I'm right. That's it. So, but yeah, that's where we are. So, anything else going on?
No, I closed my put on Pony today, the $15 put.
Yeah, I'm okay with that. I'm still okay with that. You took a little hit on that one, but I mean, I sold the today's expiration 15 puts against my June puts. Do you do that once in a while, by the way?
Oh, see, sure.
They're the same strike, but they're different expirations. So I sold them at 20 cents yesterday, and then they're zero today. So, my cost basis on the June puts have gone down 20 cents. That's the way I look at it.
Okay.
You can do that, by the way, with no cost. You just can do it. Because what's going to happen is that, but you only do it with maybe 2-3 days to go. If the stock goes, stock is 16.5, let's say, right? And you have the 15 puts for June. You're even on it, let's say, right? And then with a couple of days to go, if you sold the same strike price, but obviously expiring in a couple of days, puts against your long-term puts, right? So what can happen? What can happen? Stock stays at 16.5. Your long puts are still where they are, but then you just took in premium to lower your cost on the long puts that you're holding, right?
So it's like a poor man's covered call only on
puts.
puts.
Something like that. It's almost something like that. Yeah. So, and then if the stock goes against you, obviously your long puts are going to depreciate a lot more than the puts you're selling, but they're going to expire worthless. At least you took in something, right? Instead of watching your puts get demolished, you at least took in something. And then I'll take a look at it, and then if it looks like it's going to take another leg up, I'll take my loss and get out of it, obviously. There's no reason to keep doing it. Keep lowering cost. It doesn't work, because June, today's expiration, so we have how many weeks? We have 4 weeks to June expiration. There's still time on that. I'm not going to get out yet on those pony puts. But yeah, that's where things are at. And I want to do.
Yeah, these were expiring today.
They're expiring today. They're already zero. But did you close your UNH put covered put credit spread? Are they going to let it expire?
Oh, I closed. It was 97%.
Yeah, that makes sense. You did it well. I didn't do it because I had to do something else, and then by the time I came back, it had rallied already 15 points.
Yeah.
Like on the next pullback, I'll do it. But I don't know, man. I'm telling you, if the DOJ says defraud the government and they cancel their contracts or some shit, I don't know where UNH will open. Honestly, I don't think it'll be zero, but there's a long way to go. I don't know. What do you think? I mean,
yeah.
Yeah.
They said they haven't heard anything about it, so I don't know.
Yeah, Wall Street Journal says something, and then
yeah, no official
Wall Street Journal did that with Tesla too. Remember that they floated that the board is looking to replace Elon, and I don't know where Wall Street Journal they're going to get sued. That's what's going to happen. But I'm sure they have their resources, or they have their sources that they get this news from. But yeah, I don't know. Yeah, UNH is tough. When something is going down like that, how do you know? That is the proverbial falling knife right there. It's literally. I mean, you could have taken a stab at UNH every $100 and you'd still be wrong. 600, 500, 400, 300, you'd be just wrong. Just wrong.
Yeah.
I mean, yeah. Imagine selling puts on UNH. How do you come out of that now? I don't even know. You know?
It's like flip a coin, right? Which way do you go? Which way do you bet?
No, but I mean, if you sold puts on that, you know, cash secured puts, let's say you like UNH, a 400, you sold the 400 puts after it dropped $200 already.
Oh,
How do you even roll that thing, or how do you even? That's bankruptcy right there. It's like, I don't know.
you're stuck.
Yeah, you're stuck for a while, but I don't know. Anyway, all right. So I'm gonna say goodbye to you. Good job, man. You're doing good. Learning, hopefully, and making a few bucks at it.
Thanks for having me on, Sergio.
All right, anytime, man. See you on Wednesday. All right, everyone. I'm gonna get out, go have a cup of coffee. I have a sore throat for some reason. I'm very sorry about the screen going blank. I don't know what happened. I thought I'm trying to share the screen window. It's not even there. Garbage. Sorry. Apologies. StreamYard. Anyway. All right, everyone. Have a good weekend. We'll see you guys on Monday. Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. See you all there.